Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Sean Mackay, CEO of CoinPayments, to discuss crypto as a payment method and how stablecoins are different. Sean, it is great to have you with us. Welcome to Trade Talks.
Thanks, Jill. It's great to be here. Thanks so much for having me.
You got it. Where does CoinPayments fit in the digital asset ecosystem, and what types of solutions does it provide?
Yeah, well, primarily CoinPayments is a cryptocurrency payment gateway, which allows merchants to offer a crypto payments option for their customers. And CoinPayments is also a custodial wallet for over 2,000 different coins and tokens.
Who are some of the merchants you work with?
We work with a broad spectrum of clients that includes gaming platforms such as BetConstruct and Nux Games, where they have CoinPayments integrated to allow some of their casino operators to have a crypto payment deposit or crypto deposit option. We work with a lot of Forex platforms. We work with a bunch of e-commerce merchants as well. Typically, most of them are in the internet services space, retail, and that kind of thing. And also a couple crowdfunding platforms as well.
Are more merchants accepting crypto as a payment method?
Yeah, I mean, every day we're seeing new merchants come to the platform and offer crypto as a payment option for their customers. However, that also requires the customer on the other side of the payment to have cryptocurrency that they're willing to spend. And depending on the market conditions, some customers may or may not be more willing to spend crypto at that time if there's other payment methods available to them.
Let's talk about the gaming ecosystem for a moment. What about crypto and gaming? Why do you think gamers are more open to using crypto than, let's say, other demographics?
Sure. I think, we're talking about online gambling, the online casino space when we refer to the gaming companies. But, crypto, just the nature of cryptocurrency is very ideally suited to the gaming industry, who's considered high risk in the eyes of traditional payment gateways and payment processors, banks, card processors, all of them. Crypto is a peer-to-peer value transaction method and doesn't require any intermediaries. So it doesn't matter whether the player and the casino operate with the same bank, what region they're in. This is just a straight deposit from the player to the casino. So crypto can be borderless in nature in that regard.
How are stablecoins different from crypto, and what is their purpose?
Well, stablecoins are a cryptocurrency or a token, but the main difference is that stablecoins are pegged to a specific value, and they maintain that value rather than fluctuating like cryptocurrencies do. Stablecoins, they come in a variety of different types of theories. Some of them, the most popular ones are just issued by a custodian and issuer. There's also algorithmic stable coins and all these other ones as well. But typically it's a fiat-backed issuer that issues these stable coins.
But they can also be backed by other types of asset classes like commodities, as an example,
Sure.
In addition to what you think of traditional fiat.
Yeah, usually there's like a big mix of treasuries, different assets, even some other cryptocurrencies, as well as fiat deposits in a bank account.
How come more merchants won't accept stable coins if or even the purchaser, if they're concerned about the volatility that you see in Bitcoin or other forms of cryptocurrency, why not just accept stable coins?
Yeah, well, that's exactly what we're seeing. We're seeing a giant shift over the past few years from Bitcoin as the main cryptocurrency of choice for payments over to stable coins now being the majority of the payment volume that goes through our platform. Stable coins offer the best of both worlds. They're a cryptocurrency, so they exist in the realm of cryptocurrency, kind of away from the banks and that kind of thing, allowing that ease of transaction. But also they don't have the volatility that a lot of cryptocurrencies have, especially in this kind of early days of crypto. So stablecoins are indeed the ideal method of transacting for payments and that kind of thing, whereas other cryptocurrencies like Bitcoin might be a better store of value or type of investment vehicle.
What are the downsides to stablecoins?
The biggest downside is that you're placing a lot of trust in the issuer to maintain the dollar peg of the stablecoin. And, there's been a lot of news recently about various stablecoins depegging, some of them imploding. So that's definitely one of the bigger risks for stablecoins. But, they certainly serve their purpose, and different issuers are taking different ways around it and trying to be compliant with regulations, trying to be as transparent as they can with their holdings that are backing the stable coins. So, we're making progress there.
All right, Sean, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Jill.